Let's talk gapping stocks. Every morning before the market opens, a lot of stocks will be gapping pre-market, trading up or down. And those can give us potentially really, really good trades. In fact, the 59-minute trader, which is a course that has been the most successful course. In fact, frankly, I'm serious about this. We've never gotten one bit of negative feedback on it. It really focuses on trading the first hour of the day, where gaps are a big part of that. So if you're interested in this type stuff, I do highly recommend the 59-minute trader course. You'll make your money back pretty quick if you just follow the instructions. Then it's yours for life. So anyway, let me show you this. Every morning, Ginny, who's a member of Stock Market Mentor over in this column and Option Market Mentor over here, if you're a member of both, you see two columns here. Anyway, she publishes a list of stocks that are gapping down, and then she'll also post a list of stocks that are gapping up. And typically, they'll be, she's pretty much like clockwork about a half an hour before the open. Now, you can find this, you can find this information at various sources. Frankly, your trading software and its research department will probably have this kind of thing. But I'm not talking about where to find these. I'm actually answering a reader's question. Hey, Dan, could you comment on the best way to narrow down Ginny's list of up and down gappers into one or two trades? So I mean to oblige. So let's look at this. We'll just look at gapping up. Okay, so you see this list, and this isn't, it can be kind of scrambled because it's just a cut and paste. So here's what I did. Okay, it just took me a few minutes to just organize this list because it is in order of the gap, the biggest gap first. And so I just cut and pasted it onto a notepad and then put a bunch of hard returns in here so I can look at them in order. Now, what you may want to do is limit it this way. Okay, I only want to look at stocks that are gapping up over 10% because maybe they might go the other way. On the other hand, I'm looking through the rest of these and I see certain things like, oh, Under Armour, I like that. So I'll just put this, I'll just start here. Okay, Under Armour. What else do I see in here that I'm really interested in? And I haven't really looked at these stocks. Okay, Bristol Myers, KKR, Raytheon. Because see, these small little gaps a lot of times can be continuation gaps where the stock doesn't gap up so much that that traders fade it, or sell into the gap. Rather, the gap up in the morning shows that there's a little more interest in it than you might think. And we can look at some of those here. I'll go through several of these stocks. But, and so let's see here. I like F5, no, because I know why. This one I want to see. Okay. And this has taken me a heck of a lot longer to do because I'm narrating it than actually doing it. It really doesn't take that much time. Las Vegas Sands, I want to look at that because it's kind of been in the news lately, and so I'll get that. Okay, so again, I'm going to come back down to this, but first, I've got these stocks. Now, I'll go you one better. Here's what I've done too. I've gone into Telechart, and you can do this on you can do this on any trading platform, eSignal, TradeStation, any of that stuff. You can create these watch lists. So first thing in the morning, I went and I put these are just the up gaps. I went and put all 45 stocks on them, and now they're ranked in percentage change. Obviously, this has changed throughout the day because this market's open. It's been open almost 2 hours now. So let's go through and look at this list. I'm going to look at these stocks, the biggest ones. We'll go through those in order and we'll see what's happened. Okay, Ultra Clean Holdings. Okay, this was a major gap. You look at it, well, let's look at it on the 1 minute chart. You can see where the big volatility was first thing in the morning, okay, and now the stock's just trading sideways. So, you know, there's really nothing there. The thing that I would have actually expected this stock to do is, since it's gapping right up to resistance, I'd have expected it to actually be sold off. So that was a potential trade that I would have seen. But here's the other thing, though. You don't just short just because you think that the stock's going to sell off. Here, you'd have kind of gotten whacked if you sold at the open. You know, you'd have been covering 12% later for a loss. So that's not working. Cara Therapeutics. Okay, interesting. And you look at the news. It's in biotech. That matters. Wow, I want to see this. So this looks to me like it could be kind of a blow off top in the making. Huge volume. So you'd look at that. Vigil. Nothing here. It's a $2 stock. I would just move on. Okay, Flowtech. You see, by the way, you see in a lot of these are up gaps. Most of these are gap and runs. The S&P is off of resistance. This is the third day in a row that it's traded down. So there's a lot of pressure that's been released from the market, which is putting more money, has put more money on the sidelines, and now you've got money that can actually flow into stocks. So when you see all of these gappers, gap and crap, just gap up and then trade down, you know, it gives you a really good sense of what's happening in the market. So I like this. I like the gap up. ASPS. Now this gapped up, see, we're just in the top, in the stocks that have gapped up at least 10%. Okay, this one gapped right up to the 200-day moving average. And by the way, as you're looking at these stocks, you know, you can see what the price is pre-market. And then you'll see this, okay, well, wow, you know, this is gapping up to the 200-day moving average. Just by definition alone, because of that, you would kind of expect the stock to, you know, to at least hit some resistance and roll over a bit. That is just if you just think about the 200-day moving average. But, and a lot of you guys know where I'm going with this, the stock's been trending sideways. It's been basing for a long time. And the 50-day moving average, which hadn't even been tested here on the way down, has become support. So this stock, this is a really good squeeze, where the volatility squeeze has literally gone on for months. The stock's finally broken out. You look at it first thing in the morning, and it just kept on going. So let's move on. SanDisk. Okay. I actually mentioned this in the strategy session from the day before. That's July 22nd, where the company reported earnings, and they were really strong. And I suggested that because of SanDisk being where it was pre-market, you know, right around there, you kind of had to look for this stock to be sold into just because of the downtrend. Typically, what will happen, we've seen this so many times, it's just almost not fair. Typically what happens when stocks break their downtrends is this. Okay, so the stock breaks out and then ultimately comes back down through the box and forms a higher low and then goes. That's one way. Another way is for the stock to start drifting sideways long enough for the 50-day moving average to start trading sideways. Okay, so it will come up here. It has to be above the 50-day moving average to flatten this puppy out. Okay, and then finally we see a move here. A lot of the home builders have been like that. So anyway, we'd look at SanDisk, and I'd frankly look at it and say, well, not really sure that there's that much there. And from open here, from open to where it is right now, it's up 3.5%, which isn't a bad move. Okay, but that's one that you'd look at. We're just looking at which stocks would we want to see. Okay, Alliance Fiber Optic, again, gapping right up into resistance. Logitech, the maker of my mouse. Right up into resistance, nothing there. That's the type of thing that you would see pre-market. Now, Fortinet, this is not a trade, not tradable really, because the stock had been in an uptrend. You can see the you can see this channel right up at the top of the channel. I would look at this and say, okay, what is this doing to the other cybersecurity stocks? Because they reported earnings and they were really strong. So I'd see this pre-market and I'd look at Cyber, which is up. They didn't report earnings. FireEye, finally, thankfully, coming off of support. Vasco Data Security, after sell-off on the 22nd on a negative article about some third party getting their product to Iran. Definitely not a good thing for a publicly traded company. This stock is up. And then finally, my personal favorite, Palo Alto Networks. So this gap on Fortinet, more than anything, should get you looking elsewhere. And if you are long Fortinet, you'd have to say, you know what? This is probably a time to take some profits. There's nothing wrong with the uptrend, but I will take some profits on this. Okay, so we'll go through. Okay, Cirrus Logic, gap and run, but then you know it's not going to go too far because it's right up into resistance. Merge, okay, a gap up and then a rollover. So here's the thing. Here's frankly the best way that you can cut that list down. Oh, we'll look at a couple others. Under Armour reported good earnings. I've been, and a lot of people in the forum that I've heard from anyway, have been really, really bullish on Under Armour. I continue to be. It has shown weakness from time to time, but generally speaking, if you just look at the chart, this is a stock that's going higher. So this had a little bit of a gap, less than 3%, just not a big, huge gap, at least when this list was reported. We'll look at Valiant Pharmaceuticals, gap out of this congestion. So I'm looking at this thinking, okay, not today, boys, but generally speaking, I want to buy this stock on weakness. It's just not going anywhere. And then the one other that I wanted to see, we'll see how this turnaround is. Here's the deal. Gaps up to prior resistance, selling into this. So you've got a 3.5% profit if you just sold on this gap. What you can do is, on your trading software, put this list together. There's 45 items, and then as the stocks open up, you'll see what has changed the most. Like all of these up at the top have been runners. Okay, they're all just continuing to move. You can also do this. You can do volume buzz. Now, most of these, because they're trading in response to earnings, their volume is going to be much higher than normal. But if you just, if you sort according to the difference in volume percentage-wise relative to what the average volume is, you'll see which stocks are going the most. And you would look at those, at these big volume moves, as, you know, one of really just a couple things. First of all, when there's so much volume, you would be on the, you know, on the alert for a gap and reversal, a gap and crap, as they say, but where the stock really gaps up, so much activity that the stock rolls over. On the other hand, and this is literally the other hand, it's the other side of the argument. On the other hand, there's so much volume that the stock's going to gap up and just keep going. Okay, what we take away from the volume is not so much the direction, it's more like, where's the action? Where's the action? You know, I'm a heat-seeking missile and I'm looking for some heat. So we look here, and you can see these big, huge volume spikes. And as it turns out, these are all gaps that just kept going for the most part. We'll get to that. See. And this was one that just kept going. Well, I guess I'm not going to buy Select Comfort mattress. So anyway, I hope this helps. The whole idea is this. You have to pick the parameters. Gaps are gaps, and you can't say magically, well, you know, a gap of this extent is too much, and it's going to reverse. What you really need to do is look at the list, scan through your charts just really quick. You can just type the tickers in and look at them, and then see which charts are interesting to you. Look for stocks that have been in these tight volatility squeezes, like ASPS. You look for these stocks that have been in these volatility squeezes, because these are the ones that the gaps have the greatest potential of running, because the stock's been here to an extent that investors are complacent, and then when the stock gaps up, it's like everybody wakes up. Same thing with Valeant Pharmaceuticals. Sideways drift, 50-day moving average, back up to resistance, and now the stock's gapping up. Boom. You can see this is not a day trade. The stock's holding its own, but it's one that you definitely want to hang on to. And then finally, like Las Vegas Sands, you look at something like that again. You can see where the stock is gapping up into, right into resistance, where it has done it before. You can look at the various other casinos and see they ain't doing that great either. So, and frankly, I was in Las Vegas last week, Mandalay Bay. Really wasn't that crowded. We could actually sit down at a low dollar table and play. We actually had our own table, so go figure that. And that was on a Friday night. So anyway, the bottom line is this type of thing should work for you. The important thing is that you have the list of gaps. You go through it and find the stocks that you're familiar with, because otherwise, seriously, you're just going to be kind of like a fish chasing around a shiny object, and typically snapping at the shiny object has not worked out too well for the fish. So anyway, hope this helps, and I will see you either in the forum or in the next strategy session, depending on when you're watching this.